You are watching Market Watch, the brief overview of the key events from the world of finance. The next release of a key macroeconomic indicator indicates that analysts surveyed by Bloomberg may be very wrong. Yesterday, we talked about an unexpectedly strong decrease in oil reserves in the United States, with their projected increase, and today about a slowdown in GDP growth in the United States. According to the results of the first quarter of 2024, gross domestic product increased by only 1.6% compared to the first quarter of 2023. At the same time, the consensus forecast took into account GDP growth of 2.5%, recording a slowdown in the growth rate of this indicator from the projected 0.9% to 1.8%. Nevertheless, the market reaction turned out to be moderate, because a slowdown in the largest economy can have a positive long-term effect. As strange as it may sound, but a slowdown in GDP growth in the United States, and then a decrease in inflation, can not only help, but also save the economy. The slowdown in GDP growth, which was preceded by a decline in business activity, increases the likelihood of easing the Fed's monetary policy. This is a very important factor in stabilizing the situation, because not all sectors of the economy are developing equally well. For example, commercial real estate is still in far from the best condition, and there are many such examples. That is why lowering the interest rate can reduce the burden on the most problematic areas, thereby reducing the risk of major bankruptcies and, as a result, the formation of panic in financial markets. Despite the unexpectedly strong slowdown in GDP growth in the United States, the quotes of the American WTI oil grade were able to keep from declining and are even trying to resume growth. Recall that the key driver of growth remains the military conflict in the Middle East, as well as the overall growth of the world's largest economy, which in turn contributes to an increase in physical demand for oil. At the moment, both of these factors remain relevant, therefore, it is impossible to count on a deep decline in black gold quotations. Shifting to the cryptocurrency market, I will draw attention to the obvious weakness of buyers. If you look at the dynamics of the price movement of Bitcoin and especially Ether, you will see that the highs are decreasing. In the case of Ether, the lows are also decreasing, indicating a clear weakness of buyers. This can be explained by the lack of an additional bullish fundamental factor that can push quotes to new highs. But if the price does not move up for a long time, then the risk of its decline increases every day. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.